Well, the White House, of course, is taking a victory lap on falling gas prices. They say, quote, the average national gas price has dropped below $4 a gallon, with over $1 drop in just 58 days. This is the fastest decline in gas prices in over a decade, and they claim it's because of their policies. But gas prices are still up, as Jerry was saying, almost 80 cents from a year ago. Stephen Schork joins me now. So, Stephen, where are prices going from here?
Well, David, unless the administration has built a new oil refinery over the past month that I'm not aware of, it's pretty egregious that they are claiming victory, that they're the ones responsible for lowering gasoline prices. Clearly, what has lowered gasoline prices is the lack of demand.
Right.
We've had tremendous demand destruction, so now we know what the pain point is. It used to be $3.60, $3.70 at the pump before you started to see consumers balk at those prices. With the advent of substitutes in the market, electric vehicles, are changing work patterns, working from home, that pain point has moved higher. So clearly high $4, low $5 is now that pain point. So when we look at demand, now gasoline demand is very volatile. So we smooth it out. We take a 3-week moving average. And when we look at that demand destruction, we're 450,000 barrels a day lower year over year. And we are 200,000 barrels a day lower or below normal, seasonally adjusted. So to answer your question, where do we go here? We're about to transition into the fall, which we start to transition into winter grade gasoline. That is cheaper to manufacture. So from that standpoint, prices will move lower because we're putting cheaper product onto the market. But the big concern now is that there is a massive disconnect between the physical price of gasoline in New York Harbor and the futures market. Futures market are well below where the physical market is trading. And this makes sense because the physical market in New York Harbor, and I want to reiterate, this is the delivery point of the NYMEX contract. So those two prices must converge at delivery. We're low because those supplies in New York Harbor are at near record lows. So it's still a situation where, yes, we will get a reprieve in price because we transition to a cheaper gasoline, but we're still looking at very low supplies. Will help keep energy prices elevated heading into the winter.
Stephen, I have to ask for a very quick answer on this, but Goldman Sachs is predicting now that we're going to have $5 a gallon gas again before the end of the year. Are they on target or not?
I do believe. I'm normally at loggerhead. I normally come to loggerheads with Goldman. They're great analysts over there. And this time around, I'm on board. I do think that we have not addressed the global imbalance between supply and demand. So I do like oil prices higher.
Well, there may be some crow eating from the White House if, in fact, that happens. Stephen Schork, good to see you. Thank you very much. Appreciate it.